welcome to another Forex video from Currency Academy. So we have a new series. It is now called the On-Demand series. So the On-Demand series is basically our clients telling us what they struggle with in terms of trading, and then we make a video for them, basically so that you guys know exactly, how to solve certain issues when it comes to trading. So instead of just text and theory, you actually get to see what how you should approach a certain issue when it comes to your trading. So of course, as I said, our clients, meaning that you have to either click on the link that you see on your screen or check the link in the description, and then that way you yourself, the viewer, can make on-demand requests, and we'll make a video exactly for you. Okay, so in this video, I have a client here, Josh. So Josh is asking if we have a video on YouTube. So on opening and closing a trade. So it was not just as simple as, clicking buy or sell and then that's it. What Josh was actually asking before this was, do you guys have, a video that shows us why we should be sure about certain trades and why we should doubt certain trades at the same time? So Josh, yes, I do have a video for you. Just now actually. So we're just solving that issue just now. And you watching at home, you can also benefit from Josh's request. Of course, if you also have your request, you can make one by either clicking the link in the description or the link that you see on your screen if you are on desktop. Okay, 1 second as we answer Josh's request. And this is Josh's request about basically opening and closing trades. And what are the warning signs or the red flags that you should avoid before opening a trade? All right. So number one is emotions. Okay. So when it comes to emotions in trading are triggered by capital. Basically, if you look at the trend, it's usually due to capital. For example, if you have a $5,000 account and someone else has a $500 account, you can afford to lose $50, like it's nothing because it's actually 1% of your equity. So you risk 1% of your equity. Um, it's nothing actually. So someone else with a $500 account, for him to lose the very same $50, he panics the moment the trade goes to negative $30. He can already see that, okay, I'm losing $30, I'm losing $40. Sometimes the trade might just turn around at minus $42. So if you want to avoid emotions in trading, don't risk more than you can afford to lose. Look at it like your living expenses. Live according to your financial lane, okay? Do not try to live above your own standards. If you do that, then it will come back to bite you, of course. You might get lucky a couple of times, risking a lot of money, Soon enough, you blow a lot of money. That's what happens in trading, okay? So number two, mixed signals. Mixed signals is if you're not a pure price action trader, mixed signals is when one indicator is suggesting that you should look to buy, and other indicators suggesting that you should look to sell. We'll get to mixed signals in part two of this video on Josh's request, the mixed signals. So you'll see the charts there, and basically you'll understand why mixed signals are good to avoid. So whenever you're not sure and you see mixed signals, ignore it, find something else to trade. Number three, ignorance. This one goes without saying, okay? If you do not check your financial calendar, for example, or you do not do any fundamental research, when it comes to news trading, and you might find that the non-farm payroll is underway. If not, an interest rate decision is underway. And if you've traded the news before, or if you haven't, then you know exactly what to expect now. Um, there's lots of demand for a currency, usually the base currency or the core currency. It depends basically, what the anticipation in the market is. And you may be right for a couple minutes, but when the news comes, and the figures are actually better than expected or worse than expected, the shift will be so drastic that, your trade could really go against you. So number three, ignorance. To avoid that, have a look at your financial calendar. If not, visit websites like Forex Factory, investing.com. I actually have articles on investing.com. I also write my analysis and opinions there. So, you can also do your research there on ignorance to avoid ignorance basically. So, number four, you put mixed signals together and you also put fundamental analysis together, which is lack of research when it comes to fundamental analysis, and you get uncertainty. That's a recipe for disaster right there, uncertainty. So think of uncertainty as having a deadline, right? And your dog wants to play fetch. And what do you do with your dog when it wants to play fetch and you have a deadline? You ignore it. And that's exactly what you do in trading. Unless you're the gambit and you feel like, you're one lucky gambler, hey, by all means, but it's your capital at risk. So those are the four things that you should look for when before you even open a trade. Okay, so number one, am I risking too much? Can I afford to risk this much money? Number two, is this a confirmed buy signal? Is this a confirmed sell signal? Number three, have I done my research? And number three also falls back into number four if you put two and three together. So thanks for watching. If you would like an on-demand video for yourself, click the link in the description. If not, if you're on desktop and you want to also be part of Currency Academy, and we have free PDF ebooks, we have free Forex videos, and free signals at no extra cost. All you have to do is be a part of Currency Academy by enrolling for our Learn Forex at Home page. Alright, thanks for watching. Stay tuned for part 2.